It is Thursday, the 23rd of March, the day after the Fed day before. What a shocker we had into the close yesterday. But how did the markets respond today? What did they say after a good night's sleep? We are going to take a look at all of that. And today I have a guest, Adrian Zduńczyk, with the founder and CEO of the Birb Nest. Ladies and gentlemen, we have no time to waste. This is the final bar. Hello everyone, my name is Julius de Kempenaer, and once again I am your host for today here at the final bar, presenting to you from Amsterdam in the Netherlands. Dave is still on a short trip to Disneyland, California, doing all kinds of fun things with his family. He posted a selfie with his family on Twitter today. By the way, his Twitter handle @dkellercmt, and he's got his son sitting next to him all geared up on the airport. And I just had to think back about a time in 2016. Dave at that time was still working at Fidelity. He was the head honcho of the TA team over there. And I was a sell-side analyst going to visit him and trying to score some points with Dave and his team. And I just knew that his kid was just born. So I decided to get him a little present. And being Dutch, I decided to get one of these, these little baby onesies with the Heineken logo and the text, the first member of the Heineken drinking team. And it always stood with me when he unwrapped that package there in the Fidelity office in Boston. The look on his face, it was priceless. So I just wanted to give you that memory, basically. And that's how long Dave and I go back as well. Anyway, back to business. Thank you for joining us here every weekday after the close at StockCharts Television. We'll be going over the price action of today, try to figure out what happened, make sense of the markets, compare asset classes, compare charts, and see if we can help you make better informed investment decisions. And we do all of that by using the technical toolkit that is presented to us by StockCharts.com. I am super excited today to have Adrian Zduńczyk here with me today. Adrian is the founder and CEO of the Birb Nest. We'll talk about that later, but first, let's do our market recap and see how markets digested the Fed rate hike and its comments afterwards. And it looks like today that the markets have actually managed to squeeze out a little plus after another pretty volatile day. I mean, we opened higher, and in the beginning I thought that this is gonna be great. We're gonna recover all that loss of yesterday. That happened only half a day, and then markets started to go down again. And we're like, if you look across the board of all these equity markets, we're kind of unchanged. The Nasdaq is standing out, doing pretty well, but other than that, it's within half a percentage point. Let me go back to my grid, which I like so much for this intraday stuff. These are all 30-minute charts. And with just glancing over, you can see, because these little blue dotted lines, that's yesterday's close. So you can see that they're all pretty close to yesterday's close, but there is a bit of a move going on in between. So let's start with the S&P 500. This is yesterday's closing bar, and then we opened, and here you see how we sold off during the day. And the good news is, at least I think, that yesterday's low held as support. So that is a good news. And then into the close, we actually got a little bit of a rally here for the S&P. The same thing is happening with the Dow. You can see that it's holding around that level, a rally into the close, not surprisingly. The Nasdaq's actually, and we already saw that, it was doing better. The Nasdaq never penetrated yesterday's low. Had the same sort of move lower, but actually rallied into the close as well. So the Nasdaq is showing some relative strength versus the broader markets, versus the S&P and the Dow. Now we've got the New York Composite Index. And you can see that that's actually the weakest of the four, I think, that we already talked about. Moved below yesterday's low and never managed to return back up. So my take on this is that the blue chips, the large caps, because these are all pretty much large cap stocks, are doing way better than the small cap stuff, where obviously the NYSE Composite has a lot more into that. You can see that in the S&P 600 and 400 as well. They both penetrated below yesterday's low and did not make it back up. So that's relative weakness for the small cap index, and a little bit to a lesser degree, but similar for the mid cap. We're holding here at the levels that we saw on the 17th. The bigger picture, I think that the S&P is still a bit in limbo. Again, going back to Dave, I think I follow his Twitter, and he posted a sign. He said, Fed Day, my cheat sheet. Everything above 4,100 is bullish. Everything below 3,800 is bearish. And everything between 3,800 and 4,100 is noise. So at the moment, we're trying to make sense out of noise. Yesterday, we spoke about Canada, the Canadian market, how it was holding up. And they took a little bit of a hit today because they actually went a lot lower. They went below yesterday's low, and they were not able to recover that. So compared to yesterday, that's relative weakness for the TSX Composite Index. Volatility Index went up following yesterday. That's not a surprise, and especially with that intraday move again today for about like 1.5–2% swing between high and low. It's not a surprise that the VIX is going up. At, I wouldn't say at elevated levels. 22% for the VIX is still very, very doable. What is happening is on the bond markets. The IEF was my chart of the day, one of my 3 and 3 charts. And you can see that today that move is actually going further, and we're now about breaking that overhead resistance. We're nearing that 100 level. So it's going to be pretty exciting for the bond market, I guess, to see what happens around that 100 level in IEF. What's happening, though, is what you can see here. You can see that TLT, which is the longer term part, is not yet there. It's going up, but it's not yet there. We just looked at IEF, and then we've got SHY, which is the 1 to 3 year treasury bond, and they're actually already way up there. And if you, and I'm going to try to explain this without a visual, but the yield curve plots all the different maturities, the yield of every different maturity on a curve. And what we see here is that the shorter end of the curve is going up faster, and that pushes yields down. And that process moves slower when you go to the end. And what that means is that the entire curve is going down. So yields in general are going down, but they're going down faster at the shorter end than on the longer end. And that means that the curve is steepening. We got a steepening yield curve. Right now, the 10-2 year is still inverted, but it looks as if we're getting back up there. And that's something that I'm going to look at in the next few weeks. Let's go to a quick look at what's happening in the various sectors. Pretty similar story here. All these sectors around yesterday's close with big swings here and there. And if you just glance over these little thumbnails, I would say, then you can see that there are 2 sectors that are actually holding up pretty well. And that's XLC, Communication Services, that if I draw that imaginary trend line here, we're still good. We're still above it. XLC actually managed well to stay above yesterday's low. And the other one that does that is the technology sector. You can see that right here. If we blow that up, you can see that if I draw that trend line right here, that's holding up really nicely. So XLC and XLK are actually continue to lead the market. And if we bring that to that story that we had when we looked at the indices, that the bigger, the mega cap stocks, or at least the large cap stocks, are driving the market. That's what you see here, with XLK being obviously a very important sector. XLC is pretty significant as well. And then XLY, consumer discretionary, is the second largest sector. It's not as good as XLK, but still okay-ish. The really bad stuff, if you wish, is with real estate, where you can see that is rolling over and going to the lowest level of the last week or so. Financials are pushing against support here. and you can see industrials are sort of reaching that low level. One more thing that I want to touch upon before we end this segment is the move in cryptocurrency, especially with Adrian on the show, because he's a crypto expert. But I look at crypto from a pretty high level, and here is an RRG showing you the rotation of a number of cryptocurrencies with Bitcoin as the benchmark. And what this tells me is that Bitcoin is actually super strong. Everything is on the left-hand side, the majority inside the lagging quadrant, a little bit of upside here, but Bitcoin is to the right, and that makes Bitcoin the strongest of the pack. And you can actually see that even better when you change that benchmark to $1. And then you can see here who is the leader. That is Bitcoin. This is the trend of all these individual cryptocurrencies, and you can see how Bitcoin is leading that pack right up into the leading quadrant. So crypto in general is back in a bull market, back on a run, and Bitcoin is the big fearless leader, I would say. I'm going to leave this segment here. We're going to go for a quick break, and after that, we'll be talking with Adrian Zduńczyk. See you in a minute. Welcome back, everyone. Once again, I am Julius de Kempenaer, broadcasting to you live from Amsterdam in the Netherlands. In our next segment, I will be speaking with Adrian Zduńczyk, founder and CEO of the Birb Nest. But first, we love to hear from you. There is no mailbag segment without questions. Therefore, we like to encourage you to send in your questions so they can be answered live on air. Our email address is thefinalbar@stockcharts.com, or you can tweet us at thefinalbarsctv, or simply put a comment below the video if you're watching this on our YouTube channel. Furthermore, I'd like to share the guest that Dave Keller will be interviewing next week here on The Final Bar. On Tuesday, March the 28th, he'll be speaking with Brian Shannon, author and trader with Alpha Trends and the creator of the Anchored VWAP. Super interesting stuff. Then on Wednesday, March the 29th, he'll be interviewing Kelly Cox, an investment analyst at eToro. And finally, on Thursday, March the 30th, it will get very lively, because it usually does, when Dave Landry comes on the show, of davelandry.com, that is. Now, let me introduce you to today's guest, Adrian Zduńczyk. As I said, Adrian is the founder and CEO of the Birb Nest, and he is the first and only, so far I believe, CMT in Poland. What a great achievement. I sincerely hope that more Polish analysts and investors will follow Adrian's lead. Witamy w programie, Adrian. Jak się masz?
Oh, well, what a start to the show, man. You caught me off guard completely. I'm hooked. Crazy. What a good intro, man. I love that's the surprise I would never expected, man. That's crazy. I'm completely off the guard. You did great pronouncing my name. You did great, of course, hosting and covering for Dave. And funnily enough, I dropped a question to Dave, seeing this Disneyland kind of like a trip picture, And I was really wondering, who would be having more fun, if it's Dave or their kids, So, I still don't know.
I bet Dave is his fair share.
I love it. I love so much, what you do in the stock charts. You have such an incredible team, and obviously I admire so many skills of yours, Julius. I say it off the record. I say it on the record. More people should be aware of how excellent of a person you are, man.
I know, Adrian. I know, and you make me blush every time. So please stop that right now, at least for today. Hey, listen, before we go talk to your charts, there's one question that I have on my mind since we first met over Twitter. That was, by the way, the Birb Nest. Where does that come from?
Oh man, that's a very interesting story and very good question.
Make it short, but tell us.
I'll try. So the Birb Nest, well, the nest is the place that the birds kind of like live in. And Birb with the B at the end, is like a funny meme version of the birds, right? So the parrots, this is the entire brand about, the parrots, right? Parrots are very smart, they are very intelligent, and one specific species and in detail, which is called African grey. And those African greys, they can recite poems. They are said and researched to have to possess like a intelligent of a 3-year-old kid, So I was extremely inspired for how smart they were. They could call in with Amazon, with Alexa. They could call in overnight from their own cage, like some pulled pork, order from Amazon, and on the next day, the owners of the parrot would get this pulled pork over the door, delivered, and they have no idea where it comes from, right? So this just goes on, and I was inspired to settle as CryptoBirb, right? I was searching for the right name, and apparently the natural extension, the logical extension, was to create the Birb Nest.
Amazing. I love all these funny names. Some in some way have a very cool story attached to it. Let's move to your first chart, Adrian. That's energy XLE, the energy sector spider that you brought. Tell us your thoughts about this.
That's correct. You're very right. So XLE, I think it's a very good proxy of what's going on in the market in terms of the demand for the energy stocks, right? And if we know that the energy stocks tend and happen to lead, I would say into the recession or into the recessive times when there is at least a risk of a recession, then they tend to perform very well, right? Actually, ever since the COVID bottom that is seen on the left-hand side on the chart at the bottom, we've rallied all the time. And this is basically the first time right now that we're looking at, XLE at around 77, 78, that it's lost the 200-day moving average. And it's lost it seems, with a little bit of a technical confirmation for rejection. And it just moved in tandem along with what was going on in the banks, right? And there's this rapid kind of like a bailout going on around the SVB and the entire army of banks that were just right there hanging off a cliff, ahead of a potential collapse. So we are not out of the woods just yet. However, the immediate spike was that the energy reacted to the downside, and it's actually confirmed at the same time the double top pattern, which is, I would say, quite valid and quite popular pattern, right? To just give a little bit of a preceding information about the potential drop coming further on, right? So I would say that this double top pattern breaking below the neckline, and at the same time, this neckline ideally, is just confirmed and backed by the 200-day moving average, which is of double confluence, double significance. It brings a lot of I would say local bearish winds, that could potentially work as a magnet and help the bars gravitate towards the low end support around 60, right? That is the 4 low anchor of the symmetrical triangle pattern that is just right there, imaginary as well, with the band race, if you will, right?
Yeah.
That's exactly the point. So I would say that the energy price is losing the trend, and the long-term trend, looks a little bit of something like a long-term reversal that was also spiked by the exogenous factor, by the fundamental reasons, right? So there was this actual impetus to that. There was a rapid shift, rapid change of the narrative. And especially, since yesterday's 25 basis point rate hike from the FOMC meeting, we got a little bit of reassurance, ensured that this, in fact, may be the trend for the energy, right? So dropping energy trends, energy stocks prices will translate to more disposable income staying in the pockets, right? We pay less for the energy, and eventually you have more money to spend on something that is not only the basic goods, not only the staples. So I would say that this could in turn affect and impact positively, into the risk offensive stocks sectors, such as the ones that you mentioned, right? There was communication services, technology, consumer discretionary, and myself being rooted from cryptocurrencies, if you will, it directly translates to how miners of Bitcoin, just translated to better profitability eventually, right? Because the energy prices are what makes them profitable and unprofitable at times.
I was going to say, I was actually, at first I was going to say, like, okay, so all that money that we save on spending on energy, we can actually spend that buying on Amazon. But then I thought, hey, it's Adrian. So I'm going to say all that money that we save, we can spend that on buying Bitcoin.
That's right. That's what I did.
Because that's your next chart, and I actually see I need to bring up that long-term chart first. So here's your Bitcoin chart, the long one. Talk us through that. What do you see here?
Yeah, with pleasure. So this is a weekly bar chart, Bitcoin reaching as early as 2015 bottom, right, which was basically preceded by the bear market. So we see that Bitcoin is having fairly secured cyclical nature around 4-year cycles, often aligned kind of like with the presidential cycle. So there is some significance and technical sense to it as it emerges over the time and it climbs very aggressively. So this is an example of a very strong upward trending market eventually, which could be well reflected in the way that the 200-week moving average just moves, right? Which is the red curve. And typically, I would say that having this breakout of a critical bottoming pattern, resistance somewhere, which, at one point, for Bitcoin 2015 was around, 100, maybe $200. And then around $3,000-$4,000 in 2018 or 2019, that Bitcoin was bottoming out at the time. And right now we have a very similar pattern, right? And this, of course, goes way earlier in the history than just 2015. However, with the chart inside here, I would say that having this pattern of a bear market, kind of like just then flooring, this fundamental shift that is often coming from the exogenous reasons, and breaking through the neckline and above critical resistances defined as the those long-term fair estimates of the prices that those weekly averages are. I would say that this is a strong signal, the one that historically preceded the bull market rallies. So that is the assumption that we're maybe just looking right now.
Yeah, so you're comparing the break here in 2015 with the one that we're seeing right now, right? It looks a lot like it.
Yeah, excuse me. I would say that comparing maybe is a one thing, right? What I'm saying is that it does make sense to track those historical patterns where we have a breakout over the critical resistance, moving average, weekly moving average, 50-week moving average, 200-week moving average. Those are long-term averages, right? So they do represent those fair values, basically from the statistical reasons. So tracking those patterns that historically preceded big bull market rallies, is the one and the same pattern that we're looking at right now, it seems.
Yeah, that break is pretty significant. I mean, you can see it here. This is the shorter term version of the chart that you brought. So yeah, it's the same size, but I think you're absolutely right. So talk us about it. Do you want to add some more on this shorter term picture here?
I'd love that. Yes, you're right. So there was a narrative which was very arguable, and I would say that many people were very scared just a month or two ago about this weekly death cross, right? Where the 50-week moving average crossed to the downside over the 200-week moving average, right? So technically, I would say that such a cross in the textbook is not necessarily the most bullish pattern. However, there is substantial and incredible lag when we apply that on long-term charts such as the weekly bar, right? So besides, we have no track history basically of how this pattern performs, over the time. And so far, it just happens to be that, well, first of all, it doesn't make much sense to draw conclusions out of one data point. And then, well, it's been performing to the upside so far, right? So arguably, it's acted positively. So naturally, it would create, because we love to anchor at this easy solutions, easy to memorize solutions, and those happen to be those moving averages that we just often reflect and play on the charts overlay, that we would just subconsciously try to catch and assume that, okay, this is the long-term fair value that the prices will eventually gravitate. So if Bitcoin trades below, I will maybe buy, right? And if enough people, just repeat one and the same action, this becomes self-fulfilling prophecy at one point. So I would say that breaking above this resistance threshold, this resistance cluster coming from the two moving averages being kind of like, again, to $23,000, $2,550, $25,500, right? This was a little bit of a potential resistance cushion or like an air pocket, if you will, and which aligned historically with this horizontal level of 25,500, and this was smashed. This was smashed in a very aggressive manner, in a very violent candle or a bar that closed right, heavily above it with a decent confirmation proof. And right or wrong, I'm rallying along with the trend. However, if I were to bring my personal forecast, then putting in the context of historical patterns preceding, those historical rallies, we're looking at one and the same pattern that just keeps repeating over and over time every single cycle. That just brings and produces exponential rallies. That's what it looks to me.
Okay, man. Your timing is great because we have to wrap up this segment. We've already been talking for 10 minutes, and I feel that we can do this for like, I don't know, an hour, easy. So for sure, you're going to be back on the final bar, and maybe one day we'll invite you to Sector Spotlight, and we'll talk a little bit more about sectors and how we can use RRGs on cryptocurrencies. I think that would be fun.
I'd love that.
Thank you so much for now, Adrian, and looking forward to see you next month, man, for the first time in real life.
I know. I'm getting really excited for that. Cannot wait to meet you, Julius, and same to David. You keep doing a great job. Thank you so much for having me on the show.
Excellent. Thank you so much. And ladies and gentlemen, we need to go to the 3 and 3. And today I'm gonna actually start off with the 3 and 3 with an RRG chart. And this is one that is prepared on the drop down of the RRG page. And it shows you the rotation of the large cap, mid cap, and small cap indices, and also broken down in their growth and value segments. So you got this whole list of indexes on the screen, and they're all large cap growth, large cap value, mid cap growth, etc., etc. And this image stuck with me when I looked at it today, because it tells a great story. What you see here is that large cap growth, and large cap. So this is large cap, this is growth, and this is growth large cap. That is the best segment to be in right now. And all the others are going the other way. So if there is one segment that you need to choose, it's large cap growth for now. I think that's a very clear message, actually. And when you bring that into a normal, if you wish, chart, then this is the growth value chart that I've been maintaining for quite a while. I've written about it in various blogs. I've used it in Sector Spotlight. And what struck me was that massive double top that was built in 2021, 2022. And when we broke it, we had that great move into value stocks that actually lasted. Depends a little bit on if you were very aggressive, you could have picked it up here at the end of 2021. But a more conventional would have been the break here, and then it moved all the way down, and it touched exactly the price target based on that double top formation. Right now, we're moving off of that. You can see the strong positive divergence between the RSI and the MACD, and we're trying to get back into that area, and I think that's a bullish sign still for growth versus value. And my third stock in a third chart, I have to say, in the 3 and 3 is Meta Platforms. This is obviously one of the mega cap stocks that we have in the US, and it's completely in line with the move to growth. And you can see here, we've seen the weakness in the S&P, we've seen that drop, but Meta seems to be not be touched by that in any way. We had that massive gap, a bit of a consolidation, and we're now getting out of that consolidation pattern. And so far, Meta is holding up really, really well above that former resistance, which is now going to act as support. So for the time being, especially as long as that 195 level holds, I think that Meta is definitely worth looking at, and it keeps going above that trend line. Ladies and gentlemen, this was it again. We have to wrap it up. I'd like to thank you for watching and staying with us every weekday after the show. I'd like to thank Adrian for being with me. Our time was way too short today. We need to continue doing that because he's got a wealth of knowledge. He actually had one more chart that we didn't get to talk about. So Adrian's going to be back. And please remember, tomorrow we're going to talk about your questions. So don't forget, if you have anything to share, any questions that you want to share and want us to answer online, please send them in to the address that we saw for the mailbag. Thank you very much. We're going to wrap it up. This was the final bar for today, and I'm looking forward to seeing you again tomorrow.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.